afternoon. This is the video newsletter for buysellshort.net for Sunday, September 19th. Market continued its slow march higher again on Friday. Large part of the reason, of course, we had options expiration on Friday, which helped to keep a lot of stocks up. But we've also had the market sort of start to look forward. We've had a couple of positive economic reports, a couple of so-so reports that the market has sort of ignored. This week is going to be a key week for the markets. We've got the Fed meeting on Tuesday, and the last couple of Fed meetings have marked near-term tops on the markets. So let's see if this time is different. May not be. Late September is typically a time when the market likes to go into a retrace, and we are up quite a lot recently. However, as I've said before, we continue to dance at the party, but we're dancing close to the door. There's always the chance that this time will be different. And let's just see how it goes. We're looking at the 15-minute chart here, and you can see the slow, steady move higher over the last couple of weeks. Support right now is 10,455, which was the breakout from that little ascending triangle we had on the 15-minute chart. If we flip over to the daily chart, we get a better idea. Actually, let me zoom this chart into a closer time frame. Here you can see the Dow. We finally broke that downward trend from the April highs, and as you can see right here, the 200-day moving average right now is sitting at 10,455. So that is our line to watch with regards to the Dow. Also, one thing to keep an eye on, we've got the 50-day moving average at 10,370, catching up with the 200-day. So we could be looking at a golden cross on the daily chart on the Dow probably within the next 1 to 2 weeks. And that has been, it's been a couple of years since we've seen that happen. And the last time we had that happen, I believe, was in the '09 monster rally that started erupting. So, even if we do see a sell-off into late September, early October, everything's looking pretty okay for a nice little move into the new year, especially after the election passes and we get that gridlock that Wall Street likes so much. Looking at the SMH, which has been a big-time leader over the last few days, we got this little possible hammer top on the SMH on Friday. Support right now is 26, so we could see some weakness on the SMH this week, and we'd be wanting to keep a very close eye on this. If we're able to get above the 200-day moving average on the SMH, then we're looking really, really good, and any sort of retrace will be put on the back burner, at least for now. Let's jump into some stock plays now, however. HILL, you recall I was pounding the table on this one on Thursday. We got a nice gap and spike on this one on Friday, traded right up to the 200-day moving average, $145 high. Eased on the close like we saw many stocks. Last 10 minutes and 5 minutes of the session on Friday, we saw a lot of small cap stocks with some really strange trades. And these are stocks that don't have any options in them. And there was some serious gaming and manipulation. Usually when we see that happen, we see those stocks pop the next session. So with the Fed meeting and the announcement on Tuesday, we could see, a possible blow-off top tomorrow. So HILL, we've got RSI curling up. MACD was able to hold into positive. We've got the ADX continuing to build. And check out on-balance volume and stochastics, both in nice little upturns. And also QTM and ISLN, the other two storage plays that we initially got into Hill for. These stocks were running a couple of weeks ago. They've been making new highs here, and here we have our little play HILL still sitting 30 cents or so below its highs of last week, even though its peers are running really nicely here. So we should see continued follow through, a break of that 146 level, and we will see new highs on HILL really quickly. NENG, another storage type play. We've got a little cup and handle formation here. A breakout here, $1.60. Target is a move to the 50-day moving average. So $1.80 to $2 is what we're looking for on this secondary move. Has really nice support down here. I'd be considering adding this one 140 to 147. I mean, we picked up a little small position again on Friday and would look to add to that one if it does see further weakness down to the 140 level for a continued move higher. RGN, our little biotech gem, continued moved as high as 37.5 cents on Friday. Uh, got some weakness into the close as traders were booking their gains over the weekend, but we're looking for a move on this one to the 200-day moving average. That's at 46 cents. And, you know, our roadmap for this one is DDD. A mirror almost breakout of the range. We had a little cross after that initial pop, and then it continued to new highs. So we're still on the same trajectory here on RGN, and we should continue to see this one move higher over the next few days. SNSS, this one had a big spike early in the week, treaded water, and then right at the close on Friday, with a couple of minutes to left, went from 45 cents all the way down to 38 cents. I think this is a great little scalp pickup if you can get it 41 cents and under for a 10% move. Probably tomorrow, really early, we should see a nice little bounce back in this one after the late day sell-off. PARD is another small biotech play that's got a very nice chart. A break of 50 cents will be our buy trigger on this one, just like on CXM, and we'd be looking for a move to 55 and 65 cents plus on this. Now, one of my favorite plays going into this week is SCON. Chart is absolutely coiled for a run here. We're looking for a move to the 20-day, 171, and then 190 is what we're looking at here. Rock solid stops and support at $1.50. 160 is where we'd be looking to actually load this one. We actually picked up some more on Friday just because this one is looking locked and ready for a big move. RSI is about to break up through 30, and we did get our buy signal on stochastics. So this one, I'm thinking this one goes big for us this week and should start its breakout move tomorrow. So we'd definitely be looking to add to positions on this one. Another small little biotech play, ARRX, nicely coiled here for a move. 42 cents, sets it free. We're looking for a move to 55 cents. Another trading range stocks. RSI is finally broken up above 50. We've got stochastics in a very nice uptrend here. And this is another beaten down bio that likes to spike at least once a month. And it's been about a month since this one went on a big spike. And the chart is ready for such a spike right now. Short plays. PSTI, little turdy stem cell play, had phase 1 data from one of its 3-month follow-on trials, and that was enough to send the stock up 75% over the last couple of days. It's been up, 3 days in a row, so we should see a top tomorrow on this one. This is a stock, every time it spikes, it always retraces back to its trailing range. If we actually, let me pull the chart up. Here's the chart from the last year. You can see spikes up, falls all the way down. Spikes, falls, spikes, falls. No reason to think this is not going to happen again. They've got hardly any cash left, so I'd be looking for a financing on this. Next resistance, if it does continue to spike higher, will be 230. So if you do enter this one short, probably make it a small half position, giving yourself room to add more if it continues its move higher. But this is a stock that always falls back after moves. It's up really big on so-so phase 1 data, so this one's got some nice room to fall. We'd be looking for a move back to $1.2530 within the next 1 to 2 weeks. So that's pretty much it for the video this week. Going into tomorrow, love the setup on SCON. I think this one goes really big for us this week. Of course, we've got our play RGN. ARRX is a bio that's really coiled and locked and ready for a move here. And then, of course, we've got HILL and our NENG on the storage stocks momentum. So that's pretty much it for the video tonight. I will see you guys in the chat room tomorrow. Goodbye.